Growing up in a household where money was mismanaged, watching a father go bankrupt multiple times, having cars repossessed, eating government cheese, if you know those blocks of cheese that came in cardboard. Growing up, my relationship with money is something that I'm coming to peace with now from at that time in my life. I'm going to start with a little bit different today with my journey going into building wealth through real estate. But let's first go back in time, a handful of years into this business, and I decided it was time to buy a home. Well, how did that happen? I actually wasn't planning to buy a house, to be honest with you. I was at a closing with a real estate friend, and she explained how she had a house that she thought one of her buyers should buy. The buyer decided not to buy it. She said, it's a great house. It would be a great investment. So the reason I bring this up is this ended up becoming a house hack. Now, mind you, this was at a time when nobody was house hacking or talking about it. This would have been 2005. Okay, so here I was, young into this business, didn't have a lot of money saved, didn't actually have a plan about when I was going to buy a house. I didn't know enough to know how to get out of my own way. What happened? Well, I closed on the home. I rented out the basement. I'm going to flash forward to save a little bit of time on this story. I always knew I was going to develop the house, but here came the housing crisis. As I was working through this industry, I had bought a rental in 2006. So there I was living in my primary residence, renting out the basement, and had bought a rental, renting out that home. Now, mind you, that home was not bringing in cash flow. And I know for a lot of people looking to buy rentals, it's all about if it doesn't cash flow, I don't know if I want to do it. None of this is meant to pat myself on the back because nobody can see the future to know what was going to happen. I still own that rental property. That rental property is paid off. So what am I getting at there? What I'm getting at is the reality became that I totally undershot what would happen to rent over time on that property. Nowadays, you could look up this data online for what you can expect for payment changes if you buy a property that you do then rent out. So here we are, it's 2006. I own my primary, renting out the basement, so I'm offsetting that mortgage payment, and I have a rental property as well. That with my now wife, and in 2008, that house became a rental. So we now have 3 houses. And that property we moved into in 2008. Now, mind you, what was happening in 2008? That was the housing crisis, right? So I bought a house that was a foreclosure at a time when home prices were plummeting. They were physically plummeting, not like what you're seeing right now where home price corrections are happening, prices are coming down. One of the things that came up this week for me was Jay Powell and the founder of PayPal, Phil, talking about this fundamental problem that we have regarding the housing market and why we've got a problem, and that is there just isn't supply. Jay Powell said this back in September of 24. The problem will become we don't have enough houses. Okay, so here we are, back to 2006, then to 2008. Bought that house, started remodeling it while we lived in there, known as building sweat equity. We did most of the work. I sacrificed a lot of time with friends on the weekends, etc. And I did that back in 2006 when I bought that rental as well. I'll just kind of go through this part of the story relatively quick for you. What became of those days? Flash forward, 2 kiddos. We moved out of a house that was the home we renovated while we lived in, remodeled, etc. But what did we do before we moved out of that house? I used equity on the home, took out a home equity line of credit or a HELOC, and bought a property in Breckenridge, Colorado. If you've skied there, you know Vail Resorts. Breckenridge is one of the major mountains in Vail Resorts. Needless to say, this many years later, that property is a high-performing short-term rental. Keep flashing forward in my life, and here we are. We now have another high-performing short-term rental outside of Denver, about 45 minutes. So why does any of this even matter? It's not that it matters per se, but it's the psychology of money and the relationship for these decisions that we're making. If I'm going to be honest with you, when I bought this last short-term rental, it was after I thought the sole plan is to pay off the debt. I did pay off one rental, paid aggressively down on the other short-term mortgage. There's about 10 years remaining in it. And then my relationship with money changed. So if you're wrestling with that thought of buying your first home, you have to think about what is it that's actually holding you back right now. One question I like to ask people to start with is, do you believe in homeownership? Because if the answer to that is a clear, definitive yes, then you've already crossed that hurdle. If you're not sure if homeownership is right for you, then stay renting until you better know. After that, it becomes where I've seen clients save substantial amounts of money. And when I go back to that time in 2005, I had $20,000 saved. I had credit card debt as well. I had student loans. I had a car payment. I made a disciplined choice to put less money down on the home and pay off those credit cards. As a result, I looked at it simply from the position of, I'm not going to go charge up these credit cards. Now, mind you, I didn't have children at that time, but being financially disciplined, I ultimately decided that money was better served paying off the credit cards. The $400 a month credit card payments I was making resulted in a $100 higher mortgage payment. The net, $300. So I improved my personal cash flow by $300 a month. Now, also at a time when I talked about renting out the basement, what did I do? I offset a higher cost of living. This is going to sound whack to you. I was paying $300 a month in rent. My mortgage became $1,800, so 6x. Did I have to wrestle with what am I going to do with this increased cost of living? Yes, I did at that time. And how I chose to do it was sacrificing some of the space that I knew, quite honestly, I didn't need the space, but I wanted a single family residence. The home that I bought in 2006, I ultimately knew at that moment I would develop the home because of the zoning allowed for a duplex to be built. Flash forward 2025, handful of years ago, that home had been built into a duplex and sold as well. Additional decisions that I had to go through was more recently with the short-term rental that I acquired. This was after a time that I knew the sole plan was pay off all the debt, be debt-free. That's the mindset. Why would I have that mindset? I'm just going to be honest with you. Growing up in a household where money was mismanaged, watching a father go bankrupt multiple times, having cars repossessed, never did they lose the house, but going through all those other financial hardships, eating government cheese, if you know those blocks of cheese that came in cardboard, powdered milk, etc. Growing up, my relationship with money is something that I'm coming to peace with now from at that time in my life. But I always believed in homeownership. I knew I was going to buy a house. And what I also believed in is that I saw it as a vertical of wealth. And the reason that I say that is just simply this. Being in this industry, being self-employed, owning a mortgage company, I don't have a pension. It's that simple. Yes, we have a 401k here. I created that for the team, but I don't have a pension to fall back on. And I still, although I'm going to be 50 this year, I don't believe in Social Security. I don't know that it will be there. If it is there, great, but I didn't put it in my list of income for retirement to be reliant upon Social Security to retire from. So I knew I had to create wealth, had to take some risks. Now, currently at this time with 3 properties that are rentals and our home, I know one thing. Those houses, if paid off, will yield retirement income. Does it mean that we're just living the life of luxury? No, it doesn't. Does it mean that I stress about the finances? It does. The reality becomes, though, is simply this. I've shared this with you in prior videos, lives, etc. What I can say is the data supports real estate goes up in value. Colorado, Q1 in 1980, Q1 of 2020. I've shared the chart, 4.55% appreciation with 7 recessions, which include the housing crisis. Okay, that's when I bought multiple homes at that time when houses were plummeting in value. There were thousands of homes in the market. People were losing their houses, etc. But I simply knew that I wanted to have property. If you're thinking that real estate will become a part of your retirement, if you rate it high on your portfolio for income, residual income into the future, wealth, net worth, etc., maybe your first home isn't the dream home. That first home of mine was 800 square feet that I lived in. I rented out the basement. So well below what I thought I should have, rather recognizing what I needed because I wasn't going to be there on the weekends. I was going to be snowboarding. I was going to be with my friends, although I did want a single family. But if I was in a place now with cost of housing today, and I had money saved for a down payment, because I am seeing first time buyers typically have more money saved for down payments than I had the ability to save back then. What I'm simply getting at is maybe it's a reframe of the space you're going to move into, because it's not going to be your forever home. If it's going to become a rental, there's always going to be a need for affordable housing. What do I mean by that? Well, if I ended up buying a condo or a townhome because that allowed me to have a sustainable payment relative to what I'm paying in rent today in a city like, say, Denver, where average rent can be north of $2,000 a month. Maybe I have a townhome or a condo, but my dream was the single family. However, cash flowing in a near-term future on a property like that, breaking even, etc., will be much more achievable than a single family in a city where if you bought an average single family home and did it right now and it became a rental, you're maybe getting 40 cents on the dollar, meaning for the cost of the real estate versus the rent, you're not achieving the old adage of the 1-to-1, cost rent ratio. Those days are gone. However, what's not gone is sustained by what Jay Powell said, Mr. Thiel said about the fundamental problem we have with real estate stock in America, therefore causing home prices to continue to go up. So think about where you want to wake up in 5 years. And if you do believe in owning real estate, I will say this: are you willing to make sacrifices? I did. If I look at where I'm at now from where I was at then, and if I asked myself then, do you think you'll be here in 2025? I would have said F no. I didn't take as many risks as maybe looking back I should have. There's deals I passed up on for different reasons, whether internally, mentally, or not. But I took some, and taking some has yielded me a position where I may be blessed. Aside from catastrophic financial events, my children. Now, whatever you think about those who invest in real estate, that's your choice. But for my children, my anchor of why I continue to grind, the goal is simple: to put them in a place in life in the future so that they have financial stability, because I feel for Alpha Gen, that generation is going to have a tough time owning homes, and it's very possible they're renting those houses they own until they pass away, because the cost of real estate into the future will be exorbitantly high. If you take the 4 decades of time in Denver, 4.55%, look at that property you're interested in right now. 10 years from now, 45.5% more. Add that to the price, and that's just decades of data. Again, that's not here being put out there to tell you you should do something. That's not. You have to be the one that feels the timing is right. You have to believe in it. It has to be affordable. I talked about that on the last live. If you like this video, make sure to check out more. There's a whole library of educational videos to help you grow wealth through real estate. Schedule time, calendly.com/mortgage maestro if you want to talk about everything I just discussed.